Good morning, I'm Chris Beach and welcome to Charting the Markets on IG Live. And losses continue across most markets, really very much a risk-off feel to the trading over the past 24 hours. That's continuing today after that US downgrade from Fitch on Tuesday night. That cast a long shadow particularly over European and Asian markets, less so interestingly in the US, although we have seen some losses. But it still comes after markets, particularly in the US, have seen a remarkably strong run with little to no sustained downside. It's been about 3 months since we last saw any reasonable pullback in US indices. So in one sense, one has been overdue, and it's just essentially the fact that this downgrade has come at just the right time to knock markets and cause a bit of profit taking. And it's August, of course, now, so liquidity is fairly thin, moves likely to be exaggerated, and it's never a great month for stocks, particularly. It is historically one of the weaker months. So in some ways this lines up nicely with what you might expect to see at this time of the year anyway, and this is just the actual headline catalyst that's driven this move. Not much data overnight really to drive markets, and we're now waiting, of course, for that Bank of England decision at midday, which 25 basis point rate hike is expected, but also some fairly cautious commentary from them likely. And then Apple and Amazon earnings tonight, the big event of the week, certainly on the corporate front, really, of course, non-farms tomorrow. So plenty moving across the board. But as I say, a broadly risk-off move prevails across most markets, as we'll see in the next few updates. Starting with the indices, beginning as ever with FTSE 100, currently trading at 74.63. Sorry, getting some numbers wrong there. 74.63, and that's its lowest level now since the 19th of July. So the index has seen 3 sharp down days, if you include today, really. And that does, in one sense, restate the bearish case. We're back below the 50-day moving average. We are certainly below trendline resistance, or testing trendline resistance, should I say, from that mid-April high, which really dominated all the breakout from that on 19th of July was the reason to take us perhaps a slightly more bullish view on the FTSE 100. So it'd be very interesting to watch this today if it does oblige with that bounce off trendline previously resistance and now potentially trendline support. Then that might actually revive the bullish view. And of course, we're still above where we were in July. So the index finds itself at a very interesting juncture, although we are obviously back below the early July highs around 75.50 and back below, as I say, the 50-day moving average. So continued losses take us back down towards 72.40. The FTSE 100 back in negative territory for the year, so rather an unfortunate return to form of the FTSE 100 as a miserable index, really, in terms of performance. The DAX and the Dow, as we'll look at in a minute, both still in positive territory for the year. So the FTSE 100 just perhaps one of the first major indices to sit back into negative territory in terms of its performance year to date. But if we do get a bounce that gets us back above 75.50, perhaps we can argue for a recovery. Although you might argue with US markets looking more overstretched, perhaps that's where the real determinants of the next move will come from. Going to the DAX, 15,873, 874 in early trade this morning, and again back down for the 4th day in a row, really, after we saw it. Don't forget, it was just Monday that we saw a new record intraday high for this index. So we are still less than 1,000 points off that after 3 days of declines. It's notable, as I said at the beginning, how European and Asian markets have taken this downgrade in the US more severely, really, and I think that's a testament to how strong US markets have been over the last few years and how strong earnings season has been. It looks like earnings season is recovering there quite impressively, or earnings figures certainly are recovering. The DAX, as I say, back below the 50-day moving average, back at the 100-day moving average, heading back rapidly towards, yet again, I can't believe we're back here again so quickly, that 15,700 level, which was resistance in March. And then, if you remember, charting the markets all the way through April, May and June, the constant repeated references to 15,700 as that support level, and the regular bounces. Every time you thought it was going to break lower, it then bounced and continued to move higher, and that happened a number of times. And even in July, we were below it for about 3 days and then back above it. Buyers coming in to defend this one. So it does look as if perhaps we get another test of 15,700 and then below that 15,500, which is the July low, and then that 200-day currently at 15,281. In the short term, if it does suddenly turn around today, back above 16,050, back above the 50-day moving average, could then see more buyers enter on the assumption that we've actually seen the limit of this downward move and we go back towards those record highs. But definitely something to watch, I think. But it is US markets really, I think, that could be the driver here, and notably the Dow quite overextended from even the 50-day moving average compared to where it's been. So if it were to be a bigger sell-off in the US, then it would drag other markets down as well, really. Don't forget the US, of course, is around half the total global market cap. So really, it is still the big driver, even with the slightly better performance of non-US indices this year. For the Dow, dropping back from the highs we saw for the year, the next support potentially around 35,060, and then below that we go back to 34,500, which is such a key area really during the course of February and into June, and just into July as well. The breakout from that really sealing the bullish view and marking a broadening participation of US stocks in this rally, which continues to trap people. But as you can see really, and people rather who have been bearish throughout most of the year, but you can see really that for the Dow especially, we've not had a serious pullback here in quite some time. And if you look at what we saw in June, that was a 3% drop. Similarly in early July, that was also about a 2% drop. So you have to go back to the May drop of about 5% to have the first substantial move. And it's important to note that you could see a 5% decline, for example, from here, just to argue the case, from the highs of Tuesday's session. A 5% drop takes us almost exactly back to 34,000 itself, and yet we'd still arguably be within an uptrend. It might damage it slightly for the Dow, but certainly that is definitely something to watch there, really. Otherwise, a recovery back above 35,500 could deliver you perhaps a more bullish view, but at the moment it's definitely something to monitor in the short term. Looking to FX markets, it's of course Bank of England decision day, but we'll start with euro-dollar as the main focus really, because this one was one to watch really back at the 50-day and the 100-day moving average today, and indeed yesterday as well. Still firmly in an uptrend. It's obviously taking a bit of a knock after registering that new high for the year above 112.75 or so. Again, pullbacks are normal within uptrends, just as retracements are normal within downtrends. It's sometimes forgotten by a lot of traders and investors that markets don't go up or down, they go up and down. And this is what we've seen this year, steady trend and then pullbacks. You've had one in February, you had one in May, and now one has arrived as well for euro-dollar. So they are fairly regular and they tend to be interesting points to watch and then set up for the next move higher. And that appears to be the case now. Admittedly, we've not yet seen any recovery above 110, which would suggest that perhaps a low is in place. So we're still looking maybe for where it might bottom out. And in that case, we're looking at support levels around that July low at 108.30, and then down to the May-June low around 106.50. Those are the key levels to watch. And of course, you've got the 200-day moving average on the way for that 107.40. But no sign of a firm bounce in place just yet. Remember, of course, when you're looking for these retracements and these pullbacks in uptrends and indeed downtrends, you have to not just find the turning point, but also see when actually things start to go back up again, for example, because like a lot of things in markets, a higher low, for example, as we saw in May and June, is a process and not a one-day event. It doesn't just stop going down and then goes back up again most of the time. It tends to slow its decline, start to rally, and eventually it pushes higher. So you do get some volatility around these lows, and then it starts to recover. At the moment, euro-dollar is still, to put it in simple terms, going down. It's not yet stopped going down either. That tends to take perhaps a week or so, and then it starts to go up again. So it's definitely something to watch, though that the uptrend is still in place here. Bank of England decision date arrives again, 25 basis point hike expected from Andrew Bailey and the Monetary Policy Committee, although it is noted that there's about a 33% chance, if you look at it that way, that there might be a 50 basis point rate hike, because maybe the Bank of England still wants to deliver a strong anti-inflation message. Anyway, looking at this, the market, I think, anticipates a dovish hike, if you like, where they say we raise rates by 25 basis points, but we're very, if you like, ambivalent about doing it again. That will probably then put further pressure on the pound to the downside. And that's certainly how the market is treating it this morning. We're back below the 50-day moving average here for the first time since really the first week of June. Still in an uptrend broadly. They're never as elegant as we'd like them to be, really, uptrends. You do tend to see some choppiness. So it is perhaps not surprising that you're seeing it drop back maybe towards 126. Those were the lows of late June. Or even below that, down towards the lows at the end of May, 123, which takes us back to the area of the 200-day moving average as well. If it's a really dovish, for example, if they didn't hike rates, that would probably push the pound much sharply lower, but that seems to be unlikely given the need to keep moving rates higher but at a slower pace. But it's probably the case that they'll err on the side of caution about talking about more rate hikes, and that is unlikely to give the pound much of a lift. That said, if we get back above 128, then perhaps we might see a more positive view beginning to emerge. Maybe if they do hike by 50 basis points, that would certainly, I think, argue for a more positive reaction in the pound. And then finally, dollar yen, still on a high, really, despite the US debt downgrade by Fitch. It's slightly odd that particularly US treasuries and the dollar have not been affected by the downgrade, if only because it didn't really tell us anything we didn't know. It talked about US debt being unsustainable, having surged in terms of debt to GDP ratios. We all know this anyway, and we know that US borrowing needs to come down, and there's no plan as yet to deal with it. So they didn't tell the market anything particularly new, I think, and that's why the reaction was fairly muted, particularly in FX markets and in bonds, and that's what you saw here. Dollar yen holding around 142, 143. And deciding not to head lower. For that to happen, a move back below the 50-day would argue perhaps for another attempt to break 138 at the downside, whereas if you see a recovery, and don't forget, it really has moved very sharply higher in the space of about 4 days. If you briefly go to 1 hour chart, you can see there that you've not had much in the way of a pullback. So this might be the first one you get. Back above 132, 133, and you're back on a course to test the highs of the week and then probably on from there as well. Sorry, let's just zoom in a bit. And above there, 144.90, 145, the highs from June, the next target to the upside. Finally, commodity markets. Gold prices not really boosted by that US downgrade, perhaps unsurprisingly, of course. It did strengthen the dollar to an extent which is slightly, might seem odd, because we talk about US weakness in terms of its borrowing position, and people are still buying the US dollar. But gold not really had much of a fun time lately. We thought we were having a breakout during the course of July, when by mid-month we'd got back to 1980 and all seemed well with the buyers once again after what had been a long and probably wearing pullback from the May highs. And then it's all fizzled out, really, unfortunately. And you've just seen a retracement that's taken us back towards the 1930 level yet again, which was an interesting area of resistance during the course of June. It was attempting to break higher, having been support in May and early part of June, and then broken. So back to there, back below the 50-day moving average, really puts us in a neutral standpoint, I think. Yes, you can still argue for it being an uptrend. It's not been a very pretty one, it has to be said. It's been a bit miserable in terms of its recovery since the May highs, a long period of consolidation here. For the bulls to get back control, you need to get it back above 1970, essentially, and that might then allow us to say that, okay, a low is in place once more, perhaps, and we see a move that could take out 2000, always a psychologically important level, big round numbers in gold, as ever in things like the Dow, very important, and then on towards those May highs at 2050. Otherwise, back below 1930, and yet again, you're into this 1900 zone that was support in July and into June, and also the 200-day moving average. But finally, some movement at the downside in crude oil here after what has been a very impressive and quite relentless move higher from the June lows. It's got back above the 200-day moving average in the last couple of weeks of July, and didn't really look back until, unsurprisingly, yesterday with the US debt downgrade. Doesn't change the picture in terms of oil demand and oil consumption, but it's enough for people to say, okay, let's book some profits on this, and that's essentially what we're seeing here. It's a bit of a cliche, but it's probably true in this case. It hasn't really changed the fundamental outlook for gold, for oil, sorry. Back below trendline support from the July lows, so that's something to bear in mind here, that the price hitherto doing quite well. It's just taken a bit of a knock. Trendline break could be short-term bearish. I think it'd be more interesting to see how it reacts if and when it gets the 200-day moving average. If you see more losses, if it gets back to the 200-day and holds, then you might have to view this bounce as more sustainable. Back below the 200-day and back below 76, and you might argue that once again we've had a false dawn in crude prices and we could be headed lower once again. So at the moment, jury's still out on this one, I think it has to be said. There's no real sign that crude has stopped going up, and it might have a little bit more downside and still be within a reasonable uptrend. Of course, it does rally today, gets back above 80, back onto 82. Maybe you get strong non-farms tomorrow that drive oil prices higher and expectations of stronger demand. It's hard to price in how NFPs will move the market, really. Then you're going back towards 82 and potentially up from there onwards towards those April highs at 83.40. Bank England rate decision at the main event really today, at least until earnings tonight. So you've got that midday decision from the BOE. That's a 25 basis point rate hike expected. That's live on IGTV. So do join us then for that, for coverage of the reaction. And then, as I say, Apple and Amazon earnings tonight. We're expecting the Dow to open a little bit lower from yesterday's close, although declines have slowed across US markets. It'll be interesting to see whether they can recover their poise or whether we've got a bit more downside ahead, particularly for the likes of the Dow and the Nasdaq. But that's it for me. Thank you for joining us, and we'll be back as normal tomorrow at 10:30.